Let's talk about from sole proprietorship to LLC. What are the tax implications of the transition? Okay, so here's an overview I want you to really pay attention to. The big question first is that can you switch from a sole proprietorship to an LLC? The answer is yes. I mean, if you are a small business owner looking to upgrade your company's structure, you can actually switch from a sole proprietorship to a limited liability company. Not a problem. Okay, and by having that, you are actually able to get peace of mind, increased legal protection, and extra flexibility. Not only that, but the whole process doesn't have to be complicated. So switch with confidence. You are able to actually have the ability to do the things you have to do, but you have to pay attention to taxes also. Okay. Now let me really break things down for you. First of all, what is the difference between a sole proprietorship and an LLC? For a sole proprietorship, this is an unincorporated business that has a single owner. This type of business is relatively easy to start and maintain. You simply need a business license or permit, depending on the state's requirements for this type of company. The primary benefit of being a sole proprietorship is that the owner is really in complete control, and there are fewer startup costs compared to an LLC. Additionally, there are fewer taxes associated with this structure compared to other structures like an LLC, LLP, C corporation, or S corporation. So that's for a sole proprietorship. What about LLC? An LLC is a more complicated legal structure than a sole proprietorship. However, it provides its owners limited personal liability protection and increased flexibility regarding taxation options. An LLC can be composed of multiple members, and each member's ownership share is detailed in the LLC operating agreement. So depending on your state, you may be required to file articles of organization to establish an LLC. So embracing the advantages of an LLC can offer valuable benefits to small business owners. Firstly, the limited personal liability protection granted to LLC owners, and you also have flexibility for taxation purposes. So this is kind of cool. So the benefits of switching from a sole proprietorship to an LLC, you have your assets are protected. You have flexible management structure, enhanced credibility, which is really great. Additionally, the tax implications are really good because you're not paying taxes at the business level. You're paying taxes on your personal tax return, not when you file Form 1065. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now let's talk about the steps you need to take. So how do you switch from a sole proprietorship to an LLC, and what are the tax implications that you need to be aware of as you switch on every step of the way? So first of all, you need to find out if your business name is available. So if you go from if you have a DBA and you want to now have a name for your LLC, it's very important to really understand that basically what's going to happen here is that before you were filing Form 1040 Schedule C. Now, depending upon the structure of the LLC that you're going to form, if you're going to be a single member LLC, then your situation is not changing because the IRS is still considering you what they call disregarded entity. So you're still filing as if you are a sole proprietorship. Now, the situation will change if you are going to be a multi-member, if you're going to be a member of a multi-member LLC. That will change because instead of you filing Form 1040, you're going to have to still file Form 1040, but you still also need to file Form 1065, Schedule K1, and whatever income or loss you have at the business level, you're going to have to transfer that onto your Schedule C, Form 1040. Okay, but you don't pay taxes at the business level though. You do not pay taxes at all. So this is really important. Now you also need to file registration paperwork with the state. Basically, as a new LLC, you're gonna have to you might have to pay taxes. You might have to pay business income taxes at the state level. It really depends. Every state has its own sort of regulations. So, but when we talk about filing registration paperwork with the state, you're gonna have to put things like name and address of the LLC, the LLC's purpose. So you need to really say this like whatever the LLC will do. You need to put the name and addresses of the LLC's registered agent, and whether the LLC will be member managed or manager managed. So when we talk about member managed, basically the LLC will be managed by the members of the LLC, And manager means you just hiring an external, like somebody externally, an expert to kind of help lead the LLC. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about from sole proprietors to a LLC. What are the tax implications? And when we talk about like stuff like splitting profits and losses, for instance, voting rights, percentages, and other important considerations. And here, the tax implications are really important because if you're talking about profits and losses, depending upon the percentage you have, the pro rata that you have in the operating agreement, this will have a consequence on the tax returns that all the LLC members will have to file. Remember, as I said, when we have a multi-member LLC, basically every single member will receive a Schedule K-1 every year when the LLC files its Form 1065. And Form 1065 is an information return. It's not a tax return that you file and pay taxes on it as you would do if you were to file 1120. 1120, you pay taxes on it. But for Form 1065 or Form 1120S, you do, it's just what the IRS calls an information return. So you file that at the LLC level, but you have to, the members have to pay their taxes based on the info that is on the Schedule K1 that's been distributed along with the Form 1065. So they will receive a Schedule K1 and they'll have to account for the losses or profits that is actually inscribed on that Schedule K1. And step number 4, you need to really obtain an EIN from the IRS. This has a direct implication for taxes because you are going to use this EIN when filing your taxes going forward. Whether you have a single member LLC or you have a multi-member LLC, you're going to have to use that EIN. Consider it your company's, your LLC's Social Security. So this is the equivalent of your LLC's Social Security. And but the EIN is kind of cool also because you can use an EIN to open business bank accounts, file taxes, handle payroll, and obtain business credit. And you want to set up a business bank account so that you can write off a lot of the things a lot of the expenses that you have, a lot of the business expenses. So you got to have a business bank account so that everything can be traceable. You want to really trace things. And the cool thing is that a business bank account is an important criterion when it comes to having proper business tax planning, but also proper business record keeping. The next thing you want to do here is you want to reapply for business permits and business licenses. The thing is that as a sole proprietorship, you're probably in a certain category. But if you move now from sole proprietorship to LLC at the state level, you might have to do some adjustments. Okay, and there are some tax consequences here because basically you might have to account for sales taxes. You might have to account for excise taxes. You might have to actually file some paperwork on a quarterly basis or on a monthly basis with the appropriate regulatory agencies at the state level. Okay, it's really important to understand that you need to understand that business licenses and permits obtained by a sole proprietorship will remain valid when the business becomes an LLC. They do not. Some states and local licensing agencies will not transfer them. So it is critical to check the state, county, and municipalities' rule. So without licensing and permits requirements in place, an LLC will not be operating legally, and this can have consequences on the fiscal aspect of the LLC. And the next thing you want to do is you want to have a plan for maintaining your LLC's compliance. This is kind of important because when we talk about compliance, right off the bat, we're speaking about regulatory compliance, including fiscal compliance. Okay, and so all LLCs have ongoing responsibilities to stay compliant with their state's rules. So those rules can vary from one state to the next. So examples of possible ongoing compliance responsibilities: filing annual reports, which might be annual, biannual, or some other timetable, reporting and paying taxes, renewing business licenses and permits, maintaining a registered agent, holding an annual member and recording minutes from that event, keeping business and personal financial transactions and record separate. So it's one of those things where you want to have, depending on the size of your LLC, you might have other responsibilities also. The bottom line here is what? You need to comply with the law. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about from transitioning from sole proprietors to LLC. What are the tax implications? Let me talk to you about the action that you need to take right now here. So basically, make your switch from a sole proprietorship to LLC right now. The thing is that it's one of those things where you have to really understand the tax implications are not just limited to the federal level, because all along I've been talking to you about the fact that you have to account for Schedule C, Form 1040, and Schedule K1, Form 1065. But this is only at the federal level, but there are also some state implications. So when you switch from sole proprietor to an LLC, you have to really think about the state level, because LLCs are by definition state affairs. In other words, you actually file your LLC, you form your LLC in a state, and God forbid, not God forbid, but if you had a situation where your business is generating income from multiple states, you also have to account for filing state tax returns for your business in each state where you are operating. Because the thing is that depending upon your situation, in one state, the state where you register your LLC, you will be considered a domestic LLC. But in any state where you're not registered but still do business in that state, you are considered a foreign LLC. So a foreign LLC actually still has to file taxes and on the income that it derived from that state. Okay, and it's one of those things where states have different rules when it comes to foreign versus domestic LLC, and the business income will have to actually talk to the state tax authorities to have a clear idea about what kind of compliance method you need to follow. One thing for sure though, at the federal level, nothing changes, because whether you are formed in New York but do business in Jersey or vice versa, whatever, at the federal level, we are only one country. But when we talk about the state level, things can change. And especially if there is no tax reciprocity between two states or all the states where you conduct business, then you're going to have to actually approach the proper office to ask the question, because then you can't really get credit for taxes that you're paying in one state in another. You cannot get credit in one state taxes that you have been paying in another state. I want to really talk a little bit about strategy here. So the thing is that, of course, you can change the sole proprietorship to an LLC. That's for sure, right? But why do you want to do that? Well, basically, number one, you want to really protect yourself. You want to cover yourself. So to speak. It's one of those things where you really want to make sure that you want to protect your personal assets from the business, so that if something were to happen, at least you know that you are not going to lose everything. Okay, it's one of those things where you have to, because see, your personal assets right now are not really. You cannot write them off. Like you can't write there are certain expenses that you cannot write off as a sole proprietorship or as a business. But if you are an LLC, there are certain things you can really write off, including depreciation, especially when it comes to Section 179 assets. You have depreciation there. So again, the flexibility is there. Of course, you have a personal protection. You have a larger asset, a larger pool of what we call deductibility. And also, one thing you need to really pay attention to here is that you really have to understand that you don't pay taxes. Like the deadlines are different, right? Deadlines are different. If you're an individual, if you file for Form 1040, your deadline is April 15th. But if you file Form 1065, the deadline is still April 15th. But you do not pay taxes you do not pay taxes at the federal level. If you were to go with another tax structure, let's say a S corporation or a C corporation, the deadline might be April 15th or March 15th, depending upon your situation. So the bottom line here is what am I trying to say? I'm trying to really say that there are situations where you might want to change from sole proprietorship to an LLC, and also where the tax benefits might actually be in your favor. But there are also some situations where the tax benefits might not be in your favor. Okay, but this is a discussion for another day. This is something you have to think about. If you were, let's say, you were a sole proprietorship and you transfer to an LLC, but you're not filing federally as an LLC. In other words, you're not filing Form 1045, but you are an LLC, but you are actually electing to be taxed as a C corporation. then things become a little complicated because you are a sole proprietorship, you are transitioned to LLC, but federal like IRS wise, you're not actually filing as an LLC, as a partnership rather. You are filing as a C corporation, so you have to really account for Form 1120. But this is another topic for another day. Let me close to this conversation by talking to you about your responsibilities as an LLC owner, especially when it comes to taxes. Okay, it's one of those things where you really want to pay attention to. So, when changing from a sole proprietorship to an LLC, you really got to examine existing contracts carefully and see what kind of contracts are you committed in right now, and what are the tax implications of those contracts in terms of revenue, but also in terms of expenses. So depending on the contractual language, you may or may not be able to assign the responsibilities you had as a sole proprietor to the LLC. If the contract does not allow for this, you must discuss the arrangement with the other party. It's one of those things where sometimes it's just a lot better to hire an attorney to sort of go through everything. So if you can't do it yourself, or if the contract is too convoluted or too long also, it's just better to have an extra set of eyes take a look at this contract and really help you out. And your responsibilities as an LLC owner to the LLC itself should be detailed in the LLC's operating agreements, and this also includes the fiscal implications here. Overall though, as an owner, you have a duty of care that requires you to act in good faith and exercise reasonable care in carrying out your responsibilities concerning the LLC. When we talk about your responsibilities, those include your fiscal responsibilities. In other words, you have to pay your taxes. You have to pay your your estimated quarterly taxes, if those apply to you. You have to pay your annual taxes. You have to pay your state taxes. So those are your responsibilities. Okay. You must treat the LLC as a separate entity, including keeping all personal assets separate. Otherwise, you risk losing the protection of limited liability. This is where courts are saying they will pierce the corporate veil. So bottom line here is what? Bottom line here is that changing from a sole proprietorship to an LLC may be a smart move for your business as well as for the protection of your personal assets, right? It's all about covering yourself. And still, you should be aware that you could end up paying more in taxes and fees with an LLC than you actually would if you had stayed a sole proprietor. You just have to be aware of your situation, but also the state you're in, because there are so many individualized considerations involved in making this decision. Professional legal advice is recommended. In some cases, you might even think about professional tax advice. So you can reach out to an enrolled agent. You can reach out to a CPA. You can reach out to a tax attorney to kind of help you out, figure things out clearly in this sort of in this maze, if you will. Thank you so much for your attention. I really appreciate it. In today's conversation, let's quickly do a recap here. In today's conversation, I spoke to you about transitioning from sole proprietor to LLC, the tax implications. So I gave you the overview, the steps, and the action. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.